All right. So since we're in a deep premium of this previous range, and it seems like the market is in a bit of consolidation and probably wants to break lower. So let's assume price is going to drop all the way back to 50% of this dealing range before resuming bullish. How do I engage even in this price action? So what we need to do is first we go on the 1 hour, and what do we look at? This is how we look at price. This is how I also find dealing ranges. So I look at, okay, this is yesterday's delivery, Monday. This is the high that was made on Monday. This was the low that was made on Monday. Okay. The first thing I'm looking for is what? This is a 50%. I want to see how we use the 50% level of this dealing range. As soon as I see us go towards 50% of this dealing range, I want to look for a short setup in there. But what if I wasn't in the chart and this move, 50% move, already happened? So I'll go to my what? Let me use the 15 minutes first. Since now I've already established that dealing range of the high and the lows, 50% has been worked with. The next thing is I go down into and I begin to look intraday price action. So the next day, so when did this 50% happen? It was 6 p.m. Eastern time. So that was during Asia. So I marked that out first. And I also asked myself, what time are we in during this particular time? As I came into this market during the London session. So since we already have this dealing range right here, we already breached 50% level. So now I'm not expecting us to go to 50% anymore. What I'm expecting price to do is now what? This high that was made during Asia and the low that was made during this time here. I'll now wait for what? 50% or optimal trade entry. So now let me use this 50% or optimal trade entry. So this would be my places to enter from the market. So I would like to see what time is this. This is 2 p.m. So 2 p.m. is a low probability time to enter into the market. So the best time to enter is during the London macro Q zone. So that's 3 a.m. or 3:30. That's when you should be looking for a short setup. So right here we're inside of optimal trade entry. See how price ran all the way up there. So that's the best time. We can look for a short there. So now let's go on like the 3 minutes. In 3 minutes. So we could look for a 1 minute entry as soon as we get to optimal trade entry, or we can wait for what? A market structure shift as our entry model, depending on what kind of entry we want to get in. So since we've seen price optimal trade entry right here, and we see this 1 minute BPR right here, just right before what? 3:30, which is the optimal time when price usually do what? Target liquidity during the London session. So as soon as I see this BPR form in there, that will be my entry. That will be my entry right there. And I'll be expecting this level to be breached right here. So let's assume we also did not enter into get in at optimal trade entry right there. We could do what? See if there's a retracement also towards 50% again, and we can see how we engage 50% optimal trade entry one more time, and we did what? sold off. But yes, this was high resistance coming back again into the stealing range right here. Optimal trade entry, and did what? Before we finally did what? Took this. Look at, so this low relative to this low. Then we came back into this what? Dealing range during 5 before we did what? Sell off all the way, taking out this low right here. So this is how premium and discounts is always being used when you are looking for what? Let's take a look at it. I would say this one more time. This high, this low from the 1 hour dealing range right here. We started from what? Started from what? The 4 hour right here. And we went down into what? The 1 hour. Went down into the 1 hour. And what the first question we ask is what? Okay. This is the highest high on that day. But this was the beginning of the week. So I would like to start with the weekly range first. So I like to look at the weekly ones first. So this is Monday. This is the price delivery on Monday. This high to this low. This was the entire move for Monday's price action. So now on Tuesday, I'll be waiting for a retracement back to 50% dealing range. 50% dealing range right here. And as soon as we get 50% dealing range, I would like to see what 50% dealing range offer sells all the way down. And exactly we got it like that. So that is why now we can now go to what? The next day. Since on this day, this is the next day. So since this is the next day on Tuesday, 6 p.m., now we could do what? Since we've seen 50% being breached right here, we could now look for entries, because majority of the time we might not be able to capitalize on entries like this and this. So we are looking for the one that will offer us what? Low risk sales. So that's why we are grading our dealing ranges. We are taking it down from dealing range to dealing range for our entries, before we find our entries. So now we get 50% optimal trade entry, above 50% optimal trade entry during what? The London Q zone. You can see how time is aligning with price, because all this delivery right here was just engineering liquidity for what? London session to be able to do what? Engage in this market. Before this is the draw on liquidity right here. But London, the market is not going to just 50% boom, then go all the way down there. No, it's not going to do that. It's going to wait for Q zones for traders to be able to participate in it. So now, this is the Asia high, this is the Asia low. Look at how we come back into that range. And this is not just Asia high, Asia low. This is the high of day, and this was the low of day before the London Q zone. So, and look at how we did what? Came back to what? Above 50% optimal trade entry right here during the London Q zone. This is the optimal time when price usually move towards liquidity. And look at how we delivered from there. Entry inside of this during the London Q zone. And let's assume, yes, we entered our stops at a very good spot. We can do what? Go to what? Look for low hanging fruits objective, or hold for this higher time frame objective right here, and that will be a very beautiful trade, holding from the London session right here. So this is how we find our dealing ranges, how to engage premium and discount. So when you have seen this dealing range already happen, majority of the time on days like this, it's always a continuation move for the New York session. So once the New York comes in, most likely we are just going to be heading towards liquidity and grabbing liquidity. That's most likely what's going to happen on probably the Tuesday open somewhere here. Most likely it's just going to keep spooling all the way down to that liquidity right there, and that's literally what it's going to be on days like that. But you can see, if you look at the dealing range right here on the 3 minutes, that's the eye. This is the high of the, and this is the low of the before what the London session trade session, because the London starts by what 1:30, 1:30, and exactly 1:30 something, yeah, right here 1:30 we begin to do what, move all the way back to what, above 50% optimal trade entry. As soon as we enter optimal trade entry, what do we see us do? Sell off on the 1 minute, and we can see that sell off beautiful right there, but it still gave opportunity for people to still participate inside of it one more time, and you can see it high to low, come back to what, optimal trade entry one more time, then it sells off all the way down, and this was the low of the day, which is the Asia low. See how we sell off all the way down, we engineered more liquidity, so it's still waiting time, price is still waiting for time. But on this day, this is a high resistance day, so I wouldn't really like how this market delivered, because I was in this trade but it was so high resistance. Like, I got stopped out so many times at break even, and now target has been reached. But it still explains how you can find your premium and discount. So even though this is London session, this is exactly how you would like to see price even work in the New York also. And look at how we came all the way back 50% of this entire range, because we have not taken out this low, and this is the high that was formed at optimal trade range. So that high that was formed at a previous dealing range right there, that will be the next leg for the new dealing range. And since we've not taken this low, which is the sell side liquidity that was supposed to be targeted from this dealing range, when we get to optimal trade entry, the first objective is this low. So since this low hasn't been taken out, and you see price begin to retrace, that high that was made inside optimal trade entry becomes the new leg for premium to discount again. So we can now pick that leg and do what, measure it again like this. Then when we see price goes above 50% or reached for optimal trade entry, we could look for what, another sell right there to target this what, this low, and exactly how you want it, that's how you get it. So this was a high resistance day, but it still delivered regardless. And this is exactly how you can frame your premium and discount. Once you begin to see your premium and discount like this, spend so much time looking at the premium and discount, and you begin to see the narrative. Once you can figure out the narrative, your entry models is going to be the easiest thing. It's going to be the easiest thing. If we take a look, at this right here, this is the high of day right here, and this is what, the low of day right here, and we do what, enter what, optimal trade entry right here. Look, this is the entry model. You're in version what, fair value gap right there. That's your entry model, and that will be your entry model. And you just need to put your stop all the way up there, and wait for price to do what, deliver to your target. Exactly, easy. So I hope you find this insightful. When you have more questions, you can send to me, and I'll reply you in no time, or you can reach me in the DMs.